I don't mean to be disagreeable, but my observation would be, I don't intend to be disagreeable, is my observation is you're taking an industry that's a sleepy industry, and I was thinking about this in my seat, and I didn't comment. You know, my background is I'm a traditionally trained P&G brand marketer. What you're doing is you're driving loyalty. You're creating a culture that is driving loyalty, cultivating, not driving, cultivating loyalty amongst your employees. And you know, I applaud you for that. I think that's hugely disruptive. So, you know, that's going right at the heart. It's like you can pay people more money, and you are doing that, but the way you drive loyalty and the way you keep them is you send them birthday cards with gift cards, and nobody's doing that, especially in that business. And you know, I applaud you for that. I think it's awesome. So you're a disruptor. I summon you. You're hereby summoned to the stage. You're summoned. Do I have that power now too? Wow. Hi.
All right, fine, I'll disrupt.
Disrupt. All right. Let's see. How do we get started here? Wow, what an esteemed panel. Neil, you've been retrieved. Thanks for joining. So I also moderated this panel, that Mark and I have termed now the emerging disruptors. And we've got a diverse group of folks here. So Stephen has set up the world in which we're living now, which has changed and quite tumultuous. So given what your role is, the way you're investing, the role that you have, the job that you have, tell me how you're thinking about the environment that we're living in right now and how it affects you.
Okay. Hi, it's Janann Glasgow-George again. Good to see everyone. If I give it one word, I say opportunity, because we are innovating our way out of every problem. I work with the patent system. Every patent is an inventive solution to a problem. We're used to solving problems. But I think the problem solving is accelerating at pace, and there is a translation of some key technologies and solutions across industries, for example, AI, as we've talked about earlier, virtualization and digitization. So if we don't have enough in the workforce and we need people to interact, we create virtual humans today. If you're not up on that, it can be a little spooky, but very interesting and real, and it's multiplying the talent that we have. If we're looking about communications, there's still room to solve the spectrum issue, spectrum sharing. That's a technology area that I think is disruptive. Edge computing, I mentioned earlier. You remember when cloud washed over everything? Wait for edge, just wait for edge. Let's even think about ordinary infrastructure that hasn't been mentioned yet, the electric power grid. We are electrifying everything. Where will that energy come from? How will it be generated? All of the alternative power sources don't flow as consistently as you can imagine, and yet there's more and more electric power demand today than ever before. 30% increase just from mobile phones being added to the grid, or charging of them. So imagine if that could be platform introduced. Imagine it like the Visa network for the electric power grid to settle energy very quickly. I think in terms of entertainment, I think in terms of how do we deal with engagement, entertainment in a more personal way, the metaverse, Web 3.0, I think is coming, and also for education. So opportunity, opportunity, opportunity.
So nutshell, opportunity abounds. All right, John, you're up. So I'm only going to ask 2 questions. This is the first one. The second one, we'll go a little deeper.
Well, it's, you know, we're kind of a plain Jane, old school Midwestern family office. You know, like we like things that aren't sexy. We like old operating companies in manufacturing spaces. We're not really a venture investing family. We're not really a crypto investing family. It's, you know, it grew out of, you know, banking, right? So it's very conservative, kind of hyper Midwestern, wear your banker suit and, you know, take majority positions in operating companies. But, like you said, the problem we run into is, God, I hate to harp on it, it's all about workforce, right? And the only way you're going to maintain a workforce in the industries that we like is through culture. And so culture is the number one thing whenever we're looking at an investment is what's the culture of the company and can we improve it? Because if we can improve it, then we'll have a more successful company. We'll be able to outcompete our competitors simply based on the workforce.
Yep.
You can ask more of people. And one thing we found too is it's not about money, typically speaking. People who are money motivated are always going to be money motivated. But we find it's the smallest, it's the least important thing, particularly so acquisitions, for example. We buy about 4 to 5 companies a year, depending. And you obviously have to be price competitive, but we'll find oftentimes we can acquire a business for 1 or 2 turns of EBITDA less than somebody else, say, a larger PE firm who has more capital to deploy than we do, simply because we do what we say we're going to do. And then those people become your biggest cheerleaders, right? People want to.
When you're looking for those acquisitions, are you looking for culture fit as well?
Oh, it's absolutely the most important.
Okay.
But typically and we're not buying huge companies, they're $5 to $25 million in revenue. Like I said, plain Jane industries. But the thing people are most concerned with are their legacy. And most small business owners, anybody who's been an entrepreneur or started their own company, those people become your family. It's so much work. You spend so much time there. You grow to love your people. And so really what they're most concerned with is, are you going to take care of my people? And are you going to preserve my legacy? And how are you going to do that? And what is your track record of doing that in the past? So if you can achieve those things, a lot of times you get a better deal. You're going to lose fewer people as you integrate. And you're going to be better off in the long run.
That's great.
So that's all.
Terrific. Thanks.
Hey guys, Joseph Chan, real estate and early stage tech investor. Concerned about the future. I am concerned. We have a lot of problems, global warming, societal issues. That being said, like Janine said, that there is a lot of opportunity. I think we've never been in a better place as a society, as a civilization, the rate of change for technology. That's why I spend a lot of time in early stage tech. I get to meet with some of the brightest people in the world working on some of the most interesting problems that will be commercialized 5, 10, 15 years down the road. And it gives me a chance to see outsized potential returns. I suffer from 3 things. I'm not that smart. I went to good schools, but I was on the left-hand side of the bell curve. I'm inherently lazy, not on the pickleball board. So not that smart, not that lazy, not that, I don't like to work that hard, but investing in early stage tech allows me to follow the smart people through the door. I can recognize value. So I won't talk my book as much as I usually do, but I do have a lot of deep tech companies that I think will be decacorns, not unicorns. Happy to take that offline, but concerned about.
And you can speak more to that on my second question, because I'm going to ask you. We'll get to that.
Yeah, absolutely. In the interest of time, I want to allow my other colleagues here to say some things. So, I'll leave you with, I'm definitely concerned about, the state of the world, division and everything. And I think a lot of people in here are trying to do things that are good. The reason why, you want to have a big balance sheet, you're not going to take it with you when you die. But what can you do with that big balance sheet, to impact the world? Nonprofit donations are great. That's a one-time thing, but and I very much believe in that. But I believe also in investing in flywheels that are going to make a difference in the community, socially, impactfully. So I think that's where people who are asset allocators, when you start to think about investing, invest not only your dollars for return, but something impactful that's meaningful. Don't do the next social media company, but do something that will bring power and water to billions of people.
Terrific, thanks. Vasa, you're up.
So the question is, what are the disruptors and what are the trends we see?
Yes,
Okay. I'll actually pick up on what Joe just said, which is the disruptions that I see are actually entrepreneurs and founders who are taking the technology and making real life problems solvable for ordinary people. We have a company that actually works with your companies, your type of companies, Steve. They help small contractors to secure credit line for their working capital by giving them access to the credit that they didn't have before, because they can actually read all their information from their accounts and be able to help them get those kind of credits. So that's one example, and many other entrepreneurs that I see that I really think are the next line of disruptors are taking the technology down to the masses. We're not talking about just having Twitter and 140 character words as being the innovation here. We're
So
talking
how are you thinking about your fund, which you had a developmental fund, now you've got your next fund, and the approach to that fund and your investment thesis relative to the economy and the worldview that we've got right now?
Yeah, I mean, I come with the kind of DNA and the background of trying to look at the longer term trends and trying to see where those things may be, which may mean that I will miss trading opportunities when something is hot. I certainly didn't participate in, let's say, cannabis trades when it was really hot in Silicon Valley, and there were some people who made money in it. But if I look at the longer term trends, it is really that we have a lot of great technology already. How do we make it useful to solve problems that we haven't been able to solve up to now? And it isn't just about drones, for instance, delivering. You can take an example of Amazon. Amazon has solved great problems already. It has actually cut back on trips that I need to make for shopping. It has cut back on a lot of the excess things that I needed to buy. So that, to me, is an example of disruption which scares people. And I think Amazon is likely to get even larger. But what really worries me, and I want to kind of shift a bit to the trends that I watch at a very high level that worries me. These are not necessarily investable trends. I think technologies will always be there. We would always have exciting new technologies, whether it's satellites that are being launched by Starship, whether it's the self-driving cars, the AI-enabled medicine. All these things are enabling every day, and every decade we get new ones. If you look at what are the biggest challenges for us in the next, even I would say 20 to 30 years, I would say it has to do with the geopolitics and the way that peoples of different countries are actually forming their opinion about how they need to be governed, how they need to have their economy functioning. And we thought this was a solved problem. In 1989, Francis Fukuyama wrote an essay called The End of History, which some of you may remember. And the idea was that with the collapse of the Soviet Union and the collapse of communism, it was clear that the liberal democracy was the only model that would work and will actually advance the human society forward. So about 30 years or so later, that's not quite the case. And in fact, Fukuyama himself acknowledges that. So we are seeing some trends globally that I think are very worrying. I don't know where we will end up, but certainly we're not moving in the direction that the liberal democracies are the most functioning societies, and therefore it is a model for everyone else. We have China completely developing a completely different model. And then we have populism and illiberal democracies, and then countries like Russia developing their own systems. All of these things impact both people's lives and the economy. It impacts supply chain. Supply chain, the way people and companies view supply chain, I think, has changed forever with these trends. So anyway, I'm taking too much time here, but those are the trends that at the very high level inform me and our team as to what are the trends that we're going to need to invest in the next 10 to 20 years.
Thank you. All right, Neil, what have you got for us?
Well, hearing all these great answers, I forgot the question, so can you repeat the question?
Oh, yeah. So as you think about the economic context in which we are right now, rising inflation, just economic difficulty all around us, political tumult, et cetera, how are you thinking about this in the context of Kiwi Tech? How are you approaching it? What lens are you using? What thoughts do you have? What concerns come to mind? What opportunities do you see, to use the word that Janan mentioned earlier.
Yeah, well, we're investing in early stage tech, and from our perspective, innovation actually booms during recessions. A lot of the best companies today, like Airbnb, for instance, was born out of the 2008-2009 recession. Y Combinator, which is an incubator in Bay Area, their companies are collectively worth a few $100 billion that were born out of the last recession. So. I'm not saying we're in a recession or we're going into one. I think there's a lot of economic bright spots in the economy. Job creation is strong. Companies are very profitable. There's a lot of cash out there to invest. Obviously inflation is a bit of a worry, but I think there's a lot of levers that can be pulled to keep the economy on track. But yeah, as I said, as an early stage investor, we built a differentiated investment model. Specifically because we were from the technology services background, and after selling our last firm, we found that the best investors seem to have a differentiated approach. And so we created a model of building technology for equity. So we've scaled that to 500 startups, and we're just seeing innovation just going through the roof. The opportunities, as Catherine said, are just incredible, at least from our perspective. So we're very bullish, and a lot of investors, at least in tech, what we're seeing are excited about getting into great companies at good valuations, whether they're public or private companies. And great tech companies are staying private for a lot longer because there's so much private capital out there. They don't have to go to the public markets and be beholden to quarterly performance and, a lot of cost of being public and all the light shining on them. They can operate discreetly as private companies and continue to raise, in fact, billions of dollars in some cases as private companies. And the only reason to go public in some cases is to give an exit to their employees, because they have stock options, or some of their older investors maybe. Otherwise, not a whole lot of incentive to go public. So as a private tech investors, I just think that it's a kind of greenfield opportunity for us.
Terrific. Hold on a moment. Just a moment.
Sorry.
You can do that. Yes. Go ahead. So
new models and platforms
and then I'll ask
that make
second question.
Okay, sorry, real quick, that
There you go,
make the IPO not necessary to give liquidity. So access to secondaries through platforms like Equity Shift, for example, that are making that automated with smart contracts in the blockchain. So maybe we don't need the public markets in the same way forever again.
Yeah, I was going to make the same comment when I was at the blockchain conference. I just learned about that and was intrigued by the possibilities associated. So in this environment, thinking about what you do, your portfolio, Neil, for example, your 500 portfolio company of startups, with Fasa, what you're up to with your fund, Joe, with the deals that you're doing, all of you. So why do you have a right to win?
So
Go ahead, Joe.
This actually touches on a point I was thinking about. Another reason why I invest in early stage tech is, one, I'm Asian and I like to gamble, but two, I would say that, listen, we need to innovate out of our problems, right? Climate change, societal issues. Listen, pointing to Safa's point of, I think the biggest problem is going to be socioeconomic. If you think about, look, we need productivity to iterate out of when we have the internet. What did you used to do when you used to look for, if I don't know if some of you guys are older in the room, when you're going for directions, before you had GPS and Waze, you used to go to MapQuest and print out the instruction, or some of you guys are really old, you used to go to, USAA and order the TripTech and map out and, okay, gotta go here. Yeah, so if you remember that. So now just imagine, would you ever do that again? No, you have Waze and Google. So, but, somebody's job was automated or lost out of there. that's what we're doing essentially with Web3. The efficiencies, like, I'll just make it public. I'm all in on Web3, and we can have a long discussion if other people debate that. But the point is that people are going to lose their jobs. They need to be repurposed and put into the workforce. So people like Denise, who's sitting back there, and Brittany, who are working on future work and re-entering folks out of the prison system. All these folks who are challenged both socially and economically, if we don't figure out a way to pull those guys up with the folks who are winning, then we will have a bigger problem on our hand, I think.
Yeah.
So is the question, why do we have the right to win?
With your nascent fund,
Yeah.
why do you have a right to win, Safa?
Perseverance.
Okay.
Because
But what's unique about your approach? We've talked about it.
Yeah.
So share with our 361 family what's unique about your approach that you think gives you and your fund and your investors a right to win.
the approach generally in investing in early stage with venture funds that are called seed or early stage fund has been to invest in entrepreneurs. Mm-hmm. So, and this is really very cultural in a sense, because when they say entrepreneurs, they typically mean a fairly well-defined, usually Stanford grad, who is smart, oftentimes a male, and has come from privileged families and has worked in either Google and Facebook or others, and now has some bright ideas. So you invest in these people because they'll win. They have connections and they'll do something. And that works generally. Our approach is different. We say, let's hold off on the entrepreneurs. Let's look at the market. Let's look at what is the real world problem in the market. A market pain point that has depth, breadth, and frequency. It impacts a lot of people. It happens quite often. And it is a really deep problem. Those are the problems that become huge opportunities and what we call venture-backable companies, which means they have an opportunity to reach $100 million of revenue to be worth $1 billion or a unicorn. If we see that opportunity, then we look for companies that can solve that problem. Is there a product market fit between these companies and their product or service? When that's the case, then we go to the founder. Is there a founder market fit? Is she the right person for this market at this stage? Can she build a team? Can she innovate quickly and pivot? With a startup, you can't really go on the same basis. You have to quickly change. And is she in love with her own product, or is she in love with solving a market pain point no matter what it takes to do? I'm going to be
the other thing that you
that.
said as well that struck me, and then we'll go to Neil, is the depth of your diligence strikes me as a real point of difference for you, for your firm as well.
So we do 15. We screen 1,500 deals a year, myself and my associates. We do meetings or calls with about 200 of them. We do due diligence on 50 of them, which means much more extensive work, and we invest in about 4 or 5 a year. So that's what.
Thank you. All right, Neil.
Well, I think in terms of deserving to win, I think every entrepreneur deserves to win, and we feel we're enabling our 500 entrepreneurial teams, founding teams, to win, giving them a better chance of success with our ecosystem. We have 100+ events a year where they can meet investors and get free educational content. We obviously invest in them through our own model as well. We're opening up new markets. We just had an in-person conference in Riyadh, Saudi Arabia, to promote female entrepreneurship. We're very proud that we have a very diverse portfolio. Out of 500 companies, a quarter are women-founded or co-founded. Probably 40% are minority-owned, about 70 are African-American founded. So very proud of that. We just had a females founders demo day, or having one on Wednesday, a quarterly one, in-person one in San Francisco. So,
You've got diversity across your industry and diversity across the founders in a unique way.
Yeah,
Terrific.
exactly, yeah.
So I want to get just a quick shout for Janan and John before we close out. And Mark's giving me a little bit of the nod over here.
I'll be super quick. I invest in people, right? Our competitors, North Point Capital, Horizon Services, Heartland Services, Bessemer's entering the space. They're going to look at a P&L and a balance sheet and recognize efficiencies, and that's all well and good. and they'll give senior management an opportunity to participate. We have options for every employee once you've been there 5 years. We try to provide good jobs that will be stable and support families in the Midwest. So that's it.
Terrific.
Awesome.
It's differentiating, for sure.
Our unique value proposition is that we use patent data to identify some of the opportunities. We look at the markets, we look at the investment by all companies in a given sector, and then we look at how to position the companies that we invest in, not just leveraging their innovation solutions, but how to position them to be acquired, because most of the private small companies are acquired, not IPO. And we are diverse across technologies, from high tech to biotech, and diverse across the type of founder. But besides the data, we connect them to the resources that they need, because it's usually not done alone. You need capital, you need other partners, people, and early traction in a market. So it's that combination of data and then diversity and then connection to resources.
Terrific. That's great. It takes a village as well. All right. Thanks to this great panel. You guys have been amazing, and thanks for sharing this with us.
Thank you. Thanks for hosting.
Come join our 361 firm community of investors and thought leaders. We have a lot of events created by the community as we collaborate on investments and philanthropic interests. Join us.